review firstly, I guess, where the charts are sitting this morning, which is, as you can tell, record highs again, US equities. But what's interesting here is you're getting equities higher and T-notes higher. Obviously, you'll all know we had the release of the FOMC minutes last night. So you can tell, and what the newer guys, you'll tend to get more good at doing is, it's not necessarily that you need to even know the news, because when I look at these charts, by the fact that equities are higher, and we closed up at these levels in the US yesterday, and T-notes moved higher, i.e. US yields fell, and the dollar weakened, I can pretty much already tell that it was a dovish report. So then when I'm looking at the news in the morning, it's more of a case of I can be a little bit more focused throughout all the noise that's going on with all the news out there, and I'm looking for what really was it that they said what was particularly dovish yesterday. Looking at the actual report then and what was said, the headline reading that most news agencies are going with is most Fed officials saw tightening soon, favoured unwind plan. The minutes pointing then towards June as the next rate hike, provided recent weakness is transitory, balance sheet caps to be increased in 3-month increments. So a couple of interesting things here. One is, let's not forget that we're kind of in a similar situation almost to where we were in the run-up, kind of a week ahead of the March 15th hike that we had from the Fed. And what I mean by that, if you cast your minds back, that was when Fed officials were speaking on a very regular basis, and they were kind of talking up the prospect of a hike all the way to the point where it was 100% priced into the market. Now, if you remember the reaction that we had on the day of the actual interest rate decision in March, the Fed hiked, but then if you remember, that was when the dot plot matrix was indicative of really an unchanged projections of interest rates over the foreseeable future, whereas the market was positioned for something a little bit more hawkish. So net, irrespective of the fact the Fed hiked, the market reacted dovishly, i.e. equities and T-notes rose. And it's almost you're getting a repeat of that in terms of the price action from last night. I think on balance, most people are anticipating this hike to come. It's kind of about how they assess things going forward. They said this comment here, provided recent weakness is transitory. So they did say they want to kind of monitor the situation to make sure that any recent weakness that's been apparent isn't longer lasting and is only just a temporary factor. They also talked about this balance sheet caps, which means then that they certainly are starting to get more definitive detail on this kind of process of the balance sheet movement, which is inevitable later on this year, which would be a form of tightening. But when you actually read through the details of what the Fed have said, basically they're going for very slow, incremental kind of changes. The Fed signaled the balance sheet reduction would involve a process of rolling caps on reinvestment, which perhaps Deutsche Bank is talking about this morning means a slower initial early pace of kind of narrowing of the balance sheet. So I wouldn't say this was either hawkish or dovish. I think it's just the Fed doing what the Feds said they were going to do. It kind of carries that overall spin of the kind of slow, gradual approach, I guess, even though we are talking about a tightening process. In terms of the actual way that the market was positioned, again, I think we're in a similar situation to March, where maybe the market's a little overtly hawkishly placed for what they think they're going to hear from the Fed, and the Fed just basically stick to the script every time. And then the market kind of has to recalibrate, so to speak. So record highs again in the US. The S&P now 24, 12.5. Sam North looking very nice on that long to all-time highs. The 10-year, consequently, if we look in the bottom right, just the Bund playing a bit of catch-up, up 40 ticks this morning. Currency-wise, the dollar is just holding on to really the losses it saw last night on the back of that Fed release. So both major pairs are supported for the moment. Not really a great deal for me to talk about in terms of euro or sterling specific news. Hence, it's been more dollar-led. We're kind of sitting right on that psychological 130 type level in cable at the moment. And then in the euro, likewise, sitting at R1. It kind of got up there pretty quickly in the early part of the Asian session. That was probably, well, if you look at the way that the euro has moved, that was the actual dollar weakness on the announcement. Then the full session, Asia gets underway. And then we're kind of, I guess, fairly priced now for what has occurred and what we've heard communicated from the minutes. And hence we're sitting there, haven't done a great deal thus far in the euro. European equities, as I say, overall my assessment is that the Fed haven't really broken new ground here in terms of the information we've learned from the minutes. I think it's just really them remaining on the same communication line as they have done. So I think it's a little bit unsurprising that the DAX has pulled back a little bit here. You had that futures open, it had a little push up briefly above the high prints that were seen earlier this week on Tuesday. Only then cash market open and we kind of flush lower all the way back down to almost closing the gap. So we're kind of mid-range between pivot and R1 at the moment. I wouldn't be looking for any type of long-lasting reaction, so to speak, from the minutes. But the one thing I think it does make clear in my mind is that, and having given a lecture about equity specifically yesterday to some of the new traders, is that, you know, although we continue to hear murmurs or a growing part of the community, the investment community, talking about, you know, is this now the point of the market needing a correction, whether that being sustained or then to see the next leg higher, is that ultimately I think you've got the Trump play. It appears then that this isn't so much just based on Trump. The underlying economic strength does seem to be playing a bit of a factor. If you talk about earnings season, I think it was the best or the most proportionate highest amount of beats on the earnings per share that we've had since 2011. So underlying this is some fundamental strength in the actual accounting performance, if you like, and the profitability of these firms. And then ultimately you've got this, the real king of all backstops, which is just the Fed easing slightly off the throttle, if you like, and then that can negate any type of weakness. And as long as the Fed continue to be very cautious and gradual in their approach under an economy that continues to improve, I actually think that the Trump risk gets mitigated quite a bit. And actually this has also been helped short term. Another byproduct probably of hitting these all-time highs is that Trump, on his kind of international tour, so far so good. That being said, he is attending the NATO summit. So that would be interesting. Obviously in the campaign trail he was very much anti-NATO, and when you think about it, the US is NATO. Without the US, you know, the whole idea of that breaks down substantially. The things to look out for from that today then is, do we get another U-turn from Trump? I imagine yes. I don't think that would be wholly surprising given his track record. The other things that we might hear is that given the US budget and the way it's broken up, there's obviously a heavy gearing towards defence and home security. And the current rules of NATO would suggest that there's a 2% contribution of each country's GDP as being part of the membership of NATO and having the protection of the group. Whether the US would want other nations to kind of ramp it up, that would be something which, again, I don't think would be too unsurprising if that happened. Just quickly then to wrap up the Fed before we start talking oil, because that's probably going to be the main focal point for today. Looking at the interest rate hike expectations, this is the Fed Watch on the CME website. So this is tracking short-term interest rate futures, federal funds rate, and a hike of 25 basis points coming up in June is expected, or priced in, I should say, at 83.1%. Now, Bloomberg have a slightly different methodology that they use to do these calculations, and so if you're reading that a rate hike is priced at 100%, they're referring to the Bloomberg reading. The actual CME reading is slightly lower, but still, remember, above 50% is priced in. So this is pretty much about as done deal as you're going to get in terms of these percentages at this point in time. Obviously, things can change quite quickly, but for the moment, the market's pretty confident that that is going to occur. That's on the 14th of June. Speaker wise, obviously we'll start going into the blackout periods coming as we get closer in towards that meeting. So monitoring of Fed speakers will be key, just to cement in investors' minds that definitely this is going to be the case, that they're going to lift rates. This then is the latest kind of timeline, or let's say spectrum, of hawks, doves at the Fed. So you've got the voters on the top, and you've got the red on the bottom is the non-voting participants. So someone like Bullard, who's been the most dovish more recently, he's right on the right of the spectrum here. As dovish, Kashkari, we know. Brainard, who I believe is speaking later on at 5 p.m. She's going to be speaking. So she's a dove, as is Evans. And the more centrist people like Yellen sitting pretty much right in the middle. Harker being, of a voting stance, the most hawkish. So I'll put this in the chat afterwards so you've got it to hand. But remember, preparation going into any of these guys and girls speaking, then you know exactly what it is, what kind of comment that you're going to anticipate. Okay, let's talk oil. And this is going to really dominate probably the amount of squawk coverage that you're going to hear, because there will be a number of comments throughout the day, I'm sure. And OPEC set to prolong cuts as effort to clear glut goes slow. So the panel of 6 OPEC, non-OPEC nations support a 9-month extension. Remember, we heard that yesterday. Russian minister says option for further extension is possible. That latter comment quite interesting, actually. Russia, obviously a very key member of this deal, having any underlying impact. Keeping in mind as well, though, that they never got to their target amount of the cut that they did agree to back in November. So although they're committing to taking part, they haven't yet, like the Saudis and other countries, actually fulfilled their side of the bargain. So something to monitor in the future. But let's have a look at oil. I've already had quite a few questions put my way this morning about what's going to happen today and timings and things like that. And I think first of all, you've got to look at the whole picture here. So I've got looking at a 120 minute candlestick here. So I'm trying to encompass the month of May. So we got the 1st of May here right at the bottom. We got the dip. That was the low point that we saw on the 5th. That was pretty much the 44 handle. I mean, it was just above 44.13. But since that point, we obviously had a quite phenomenal rally, really, of where we are trading at the highs at the moment. We've rallied just shy of 18%, 1.8. That's a pretty big move in terms of over a period of about 24 days, or 20 days actually. If it was on the 5th we hit that low. Now, all of this has come on the back of the pricing of future expectation. OPEC have managed once again to make us all believe that what they're going to do is enough to have a credible impact on bringing down this oversupplied market, and they will continue to cut in order to prop this price up. And so the ebbs and flows of this move higher have come 6-month extension. Then it was kind of, we had a collective agreement, everyone seemed to on board for action. Then we had the next level, which was 6 months turned to 9 months. Then you've had people like Iraq saying that yes, they would also be willing to take part in this, and then hence now you've started to get a little bit of consolidation just below this 52 mark. It's kind of 51 to 52 area. So actually, I think that should OPEC do as they have telegraphed, they have hinted quite explicitly towards the 9-month extension, but also doing the cut to the same size as what they did in November. So effectively, you're keeping in place the same quotas, but you're just doing it for a longer period of time. Net result, overall, it's a bigger draining, let's say, or it's a bigger cutting of production in that respect. The key thing, I guess, from a trading point of view here is really two scenarios. Well, there's 3 scenarios that could unfold. One is the status quo. They fulfill their mandate and what they've said, And then actually what you might get is a little bit of buy the rumor, i.e. what we've seen, and sell the fact. And actually as it gets signed off and the agreement gets done later on this afternoon officially, then some of this move just starts to pare back slightly. Now, I'm not looking for a sharp correction. I'm just saying that now that they've you've bought into it, they've done it, that's it now. You're not going to see anything else for another 9 months. And actually, then you start thinking, well, the market's priced in 18%. That's that's quite a big move. Then we start asking about the compliance issues about this deal going forward. US output, we had the DOE crude oil inventories yesterday. That was back up again about 0.2%. That continues to be ramping up in North American production. All these other concerns might start to materialize once this OPEC kind of circus leaves town, so to speak. So that's one scenario. The other scenarios are we get what would be a bullish surprise. What if they say we're doing 9 months, but we're going to do double the size of the cut that we did before? Now that hasn't really been talked about too much. Where the market's expectation is for a cut of the same depth, if you like. If we got something that was more larger, and by larger, I'd say you have to look at it on the scaling factor to market impact. If they said they're going to do a collective OPEC, non-OPEC cut of 2.5 million, that's kind of level 1. If they said they were going to do 3 million, level 2. If they said they're going to do 3.5 million, that would be the higher the number, or the bigger the cut that they're going to do, obviously the much bigger impact it will have on prices. So that's what you would need, I think, to really take this price point up another notch. And when I say that, I'm talking if we're going to push up through 52, hit 53, and then in the short term go higher, we really need either 12 months duration, which I think is not going to happen, or they do 9 months and a much deeper cut than they did before. I think the probability of that occurring, though, I would say is fairly slim. Again, the baseline scenario is they do as they've been leaking in source comments yesterday. The bearish scenario, and actually the one that could cause the bigger reaction short-term intraday in the market, would be actually when they all come around the table to sign this deal off, they start running into issues. Iran starts saying, well, I'm not sure if I really want to agree with what Saudi are saying, given that Saudi are getting into bed with Trump, and then they're talking aggressively about Iran. That could be one particular situation to monitor, given their history and their relationship. Or Russia might say, actually, no, we want some other terms and conditions. Other countries might ask to be left out of the agreement. Some other countries might say we're only going to do it if it's 6 months. Obviously, now that the market's at a $52 handle almost, if it ends up being a 6-month deal and now not 9 months, then this price has got to come off at least a little bit. If that was a scenario, they did the same size cut, but they did it for 6 and not 9 months, I'd definitely be looking for $51 would break. I'd probably be looking for a break below that low we had on the 23rd of 50.50 type movement, if that was to come into play. Worst case scenario, they just can't get a deal done. But given the way that it seems that everyone has got a mutual agreement to get this done, I think that that's, again, a very low probability. But the thing that I want you guys to do when you have these big events like today is try to think about all the different scenarios that could play out. So then, when you're starting to decipher the news and the comments as it comes, you're actually able to just allocate a strategy immediately, rather than having to think so much on your feet and be reactive. You're almost just there, ready to go, depending on what scenario plays out. And then you can actually apply that fundamental analysis and look at the charts, go through each scenario and play out technically, where would you execute that plan? Let's say the worst case scenario occurs, you get the blip lower, where's that price going to? It's going to go to somewhere technically. It's probably going to find a natural point. When the fast money hits it, People like to sell it in momentum to a point where everyone will look to then get out of the trade. You can do all of this analysis ahead of time. So now looking at execution then, this is the schedule for today's OPEC meeting. This is the tentative program. Now these are Vienna times, so we're looking at 1 hour ahead of London. So we're coming up to the opening session. All OPEC heads of delegation and delegates and press, they all start meeting, congregating at 10. You then have a session, closed session, that'll be 9:45. The actual conference, the joint press conference by the president of OPEC, where they actually give the definitive decision, doesn't actually come till 4 p.m. But for the more experienced people, you'll already be fully aware the joint press conference is an absolute non-event. The joint press conference is not important because, as we've heard yesterday, we really already know what they're going to do. The question mark now is, what's the very small chance that they don't actually do what they've said in the last 24 hours, that being a 9-month deal? That's the trade opportunity. That's the bigger one. If they don't do that, if they do 6 months or they do 12 months, so to speak. So you will know well ahead of that joint official press conference what OPEC intend to do. They do not mess around when it comes to speaking to the press. They will have these closed sessions, open sessions, then literally the head Saudi oil minister will just walk over to the press and go, we're doing this. And once really Saudi speaks, it's a done deal in that respect. Okay, quick look at the calendar. This morning you're looking for the second estimate of first quarter growth in the UK. So any sterling traders, just be mindful at 9:30. Obviously, as we go through these GDP readings, it's kind of a depreciating impact between the advanced, the preliminary and the final. So this is kind of the middle reading. I'd still be watching the pound, not expecting a great deal of that. The consensus estimate, as you can see, is for unrevised from the advanced reading, 0.3% quarter on quarter and 2.1 on a year-on-year basis. One thing to remember, I can just see on my charts, the DAX has just decided to take quite a substantial move to the downside. Just looking on the headline feed, can't see anything. One particular important thing here to remember in Europe is today is an Ascension Day. What does that mean? It means that the Swiss and the Nordic markets are completely shut, but it means that although the likes of Germany and France and so on are open, it means volumes are much lower than they normally are for this religious holiday. Most people in the likes of Germany or Spain, they actually don't go to work today, even though the markets are open. This can lead to, if I put this DAX chart on a minute, this type of price movement. It means that when the liquidity is lower, there's a greater propensity for the market to see some quite erratic and sharp movement. And today, well, you've just seen this, we closed the gap. You can see we found in the futures some support around that gap fill at just after 8, 8:30. A break of that, consequently pivot goes, and then we've had this big push lower, taking out yesterday's low as well. It looks like you can see that band of support we were just breaking through, and then S1 as well was that low print from it's a timestamp on here, so that was yesterday evening. That was the post FOMC kind of minutes low. So this is a combination here of technicals, momentum, stops being triggered in a liquid market, is how I would interpret this move. But as I say, when it's a holiday like this, that's when you tend to get these types of movement, and you should be aware when we do have market holidays of that fact. Nothing fundamental on that move. I haven't even got the squawk on, but I can tell you just by the fact that the way the prices are moving, that that's probably the case. Okay, let me just switch back and show you what I was looking at with that DAX just now, so that makes a bit more sense of what I was just talking about. So I was just looking on the minute. I was just looking at these moves here. See, that was that kind of gap fill on that high point just before the close yesterday. bounced off that twice. Third test, break, pivot goes. You get some momentum on that move. We break that range of yesterday's session. The FOMC post-minute low gets broken in tandem with the S1. It just it's almost like a snowball effect, if you like. And then we get quite an aggressive bounce here off that initial blip lower. Okay, wrapping up OPEC meeting then throughout the day. I did actually have already sent out to the your inbox the full schedule for that. So it's in your emails. And then, as I said, with the Fed timeline, you've got Brainard, who is a voter and one of the more dovish members, speaking at 5 p.m. Okay, I am going to wrap it up there. Come up to 9 o'clock, so have a good session. Any questions, then feel free to drop them into the chat room. Thanks very much, guys.